Bitcoin has just blasted into a new all-time high, and altcoins are setting up for their next big move. As Bitcoin enters price discovery, it becomes absolutely crucial to fine-tune our strategies and position with intent. This video is especially important if you're currently on the sidelines or sitting on losses from early cycle mistakes. Today, I'm going to walk you through exactly how I'd build a portfolio if I were starting with $5,000 right now. And more importantly, how I'd plan my exits with precision and timing that fits this Bitcoin-led cycle. I'll also explain why it's not over for you, even if you're underwater or have missed the boat so far. Unlike most YouTube videos that toss out a list of coins with vague allocations, this is a step-by-step blueprint that you can actually use to build a portfolio from scratch, with a clear and flexible exit strategy tailored to different risk levels. If that sounds helpful, support the channel by smashing that like button and subscribe if you haven't already. Let's get straight into it. Before we talk specifics, let's take a moment to understand the big picture. There are some fundamental shifts happening this cycle. And yeah, I get it, every cycle people say this time it's different. But this time, it actually is. And understanding this shift could make all the difference in how you navigate the rest of this bull run. So how is it different? We haven't seen the usual flow from Bitcoin to blue-chip altcoins, then down to mid and micro caps. Instead, we're seeing sectors take turns pumping at random intervals. While Bitcoin has dominated most of the liquidity this cycle, there have been bursts where specific altcoin sectors pulled off impressive runs. This cycle might not bring us that 2017 or 2021 style full-blown alt season. Instead, we're looking at mini alt seasons, sharp rallies followed by cool-downs and consolidation. Also, with institutional money now in play, this market isn't being led by retail hype anymore. That means we're likely to see a lengthening cycle, and if you're still using old strategies, you're probably already behind. You might be wondering how any of this helps if you're sidelined or sitting on red bags. The truth is, many altcoins, even strong ones, are still trading near bear market lows despite Bitcoin being near all-time highs. This creates an opening for new entrants. With a lengthening cycle, we'll likely see multiple bull and bear phases within altcoins even while Bitcoin continues trending up. So instead of waiting for that perfect bottom, the real opportunity lies in timing drawdowns and riding multiples, not just buying bear market lows and selling the top. That mindset is outdated. Just look at Beam, which had a huge run in March 2024, followed by a full retrace and then another run to similar highs only to retrace again. Superverse followed a similar pattern but pulled an even stronger second wave. WIF had nearly identical all-time highs in both April and November before pulling back again. We'll talk more about how to play these patterns effectively when we get into the exit strategy. But the takeaway is simple. Even if you miss the first move, you'll likely get another chance. In past cycles, missing a take-profit opportunity often meant you were stuck for years. This time, with more liquidity rotations, you get second and even third chances, but only if you play it smart. Let's get into how I deploy a fresh $5,000 portfolio today. Most portfolio videos will tell you to allocate 25% or more to Bitcoin or top 5 coins, but if you're working with just $5,000, putting a quarter into Bitcoin makes little sense. While Bitcoin has been a beast, it's unlikely to do more than a 2x from here this cycle. Meanwhile, quality altcoins can still 5 to 10x easily. Bitcoin isn't a mover, it's a store of value. It holds up well during dips and protects you long-term, but it's not where you'll get the most upside if your capital is limited. So instead of allocating to Bitcoin up front, we'll use it as a profit-taking destination along with stables. I'd start by allocating $1,000 to short-term narrative trades. This is your rotation capital and the high-opportunity segment of the portfolio. My goal here would be to aim for a conservative 10x across the cycle. If narrative trading isn't your strength, you can split this equally between large and mid caps. I'd stay conservative and not wait for a 5x or 10x on each trade. If I grow this $1,000 to $1,500, I'd pull out the original $1,000 into stables, let the 500 profit ride, and only re-enter when I find another clean setup. This gives me dry powder for dips and keeps me unemotional. Next, I'd allocate $2,000 to large caps. This acts as your stable foundation and helps manage downside risk. I'd look for coins with market caps over $3 billion with minimal overhang from old bag holders. For the L1 category, I'd go with SUI instead of Solana. SUI has a considerably smaller market cap, giving it significantly more upside potential. It has already demonstrated impressive strength by bouncing hard off recent lows, while many other major L1s have lagged behind. That kind of relative strength tends to be a strong signal when the broader trend shifts in favor. For AI, I'm backing BitTensorTAL. which continues to lead the category with real on-chain demand, a growing developer ecosystem, and solid community engagement. We began accumulating it around the $220 mark back in April, and since then it's already delivered a clean 2x. If you want access to trades like this in real time and want to be early on high conviction setups, make sure you follow us on X and join the Discord community. Links in the description. For memes, I'd pick Pepe. We haven't yet seen a Dogecoin level run from Pepe, and since it typically moves in sync with ETH, it serves as a strong ETH beta play. When ETH rallies, Pepe tends to follow with exaggerated moves, which makes it a solid high beta meme play. And for the RWA sector, my pick is Ondo. It's backed by strong institutional infrastructure and has already proven its resilience by bouncing decisively from key support levels. With increasing narrative focus around real-world assets, Ondo looks primed to break past previous highs and enter price discovery. The goal with large caps is not necessarily to pull off a 10 to 15x. It's to generate reliable cash flow that can be reinvested into higher-risk, higher-reward plays in mid to low caps, while consistently building your cash-out and long-term stacks. More on that in a bit. That wraps up the large cap allocation. Now let's talk about the mid-cap picks, where I'd allocate the remaining $2,000. This is where we go a bit more aggressive. Each of these picks is under $1 billion in market cap and offers significant upside if timed correctly. For an L1, I'd go with Say. It's been heavily oversold lately, but on-chain activity is growing and active addresses have been climbing steadily. It's also backed by major players like Trump-linked World Liberty Finance, which adds weight behind the scenes. We've already seen two strong rallies from Say, one in March 2024 and another in December, and I'm bullish on it gearing up for another run as momentum returns. In the gaming sector, I'd allocate to Beam and Superverse. Both had explosive moves earlier this cycle but fully retraced after the hype cooled down. Gaming hasn't caught fire yet this cycle, but with the GTA 6 launch building anticipation and a fresh wave of attention around metaverse narratives, I expect momentum to come back strong. These coins are well positioned to ride that second wave. For another meme exposure, I'd go with MOG. I expect MOG to revisit its prior highs as ETH continues to gain strength. It serves as a strong high beta meme play that hasn't had its full run yet, and with meme coin sentiment likely to rotate again, it could have plenty of room to run. So this portfolio structure gives balanced exposure without over-diversifying. You've got 20% each in L1s, memes, and gaming. AI and RWA get 10% each, and 20% is reserved for short-term rotation trades. Let's talk about exits because that's where most people fail. Most in crypto don't fail because they invest in garbage, they fail because that garbage pulled off multiples and they didn't hit the sell button. I have two separate exit strategies, one for large caps and one for mid caps. Let's say you've got $500 in a large cap. Once it doubles to 1,000, you take out 500 and split it up. 200 goes into your long-term Bitcoin stack, which stays untouched no matter what. No matter how tempting it is to re-enter altcoins with that BTC during a dip, don't do it. That's your long-term safety net. Another 200 goes into a promising microcap or low-cap opportunity, but only if you found a legit project with proper entry and invalidation. If not, be patient, don't rush the deployment, and the remaining 100 is locked profit. You don't reinvest it, that's your final cash out. Repeat this strategy every time the position doubles or wait for a 2x if you want to be a little more aggressive. Just stay consistent with it. Now for mid-cap exits. If a $500 position grows to 1,500, I'd pull out 500 and allocate it like this. 300 goes into a lower cap opportunity with high upside, 100 goes into Bitcoin, and the final 100 goes into stables. This method might feel overly cautious at first, especially if you're used to holding for 10x dreams, but it's built on hard-earned lessons from past cycles. I've been in this space since 2017 and I've round-tripped multiple X's. Trust me, you don't want to learn the same lesson the hard way. Don't let greed steal your gains. And remember, the proceeds you pull out from this system are not free money, they're your insurance for when the music stops. With this cycle playing out differently with lengthening patterns and multiple bull phases, you need a plan. You can't just hold and hope. You need a system that protects you while still allowing you to capitalize. I hope this helps you rethink your portfolio approach and prepares you to take profits instead of just screenshots. If you like the content, support the channel with a like and subscribe if you haven't already. Also, follow us on X for live updates, trade setups, and alpha we don't always have time to include in these videos. Thank you for watching, and I'll see you in the next one.